Top 5 Most Dangerous DeFi Risks for the Crypto Community. The different kinds of DeFi risks. One of the most significant breakthroughs in recent years has been the decentralized finance sector. Every day, new interesting ventures emerge, drawing a large number of investors. At the same time, due to the novelty of many services and investment dangers, DeFi remains a rather isolated portion of the cryptocurrency industry. The presence of hazards is an unavoidable component of any rising market. Regardless of the risks, DeFi attracts new consumers and allows you to profit from new technology. In this, we will explain what DEXs are, what risks investors face in the DeFi marketplaces, and how you can safeguard your wallet from them. To begin, we should remember that risks can be assigned to a variety of conditional categories. The first of these are hacker attacks, to which many major DeFi projects are vulnerable. The second type of DeFi risk is related with governmental control, or, in some situations, its absence. Another set of risks may be associated with your counterparty or project token, which is directly related to the team's behavior. Let's take a closer look at these locations now. Top 5 DeFi Threats. DeFi, as a new area of the economy, is still being investigated, and hence contains some risks for investors. When working on markets, the following are the primary DeFi risks. The dangers of smart contracts. Legal dangers in DeFi. Counterparty dangers. Risks of token exposure. Temporary losses. Now, let's take a look at each of these hazards and see how we can stay safe when trading and investing in cryptocurrency. If you want to learn more about DeFi, tradicrypto.com has thorough instructions on the subject. Number 1. Smart Contract Danger. DeFi operates on the basis of smart contract technology. The code of such protocols comprises information on the contract itself, its terms, participants, and transaction amounts. Smart contracts are a tempting target for hackers because they contain valuable information. As a result of DeFi liquidity pool risks or specific transactions, attackers take huge sums. When smart contracts are deployed, they are most vulnerable. In practice, if hackers fail to install a weakness at an early stage of the protocol's creation, the likelihood of its cracking reduces over time. Even in this instance, you must understand that the smart contract DeFi risk exists because smart contracts keep cash for a set length of time. It is also critical to note that huge liquidity pools attract the attention of more attackers. At the same time, they make more efforts to prevent attacks. Keeping this in mind, the quantity of money in a smart contract has a direct impact on the possibility of a hacker attack. Number 2. Legal danger in DeFi. Despite the theory underlying the financial industry's name, the reality is quite different. Over the last 3 years, the DeFi market has grown significantly. The pressure from government authorities grows in tandem with the development of the industry. DeFi has grown in popularity in the United States, where the Securities and Exchange Commission has often stated a desire to adopt methods for controlling the market. This is why, as the first move in attempting to impose taxes and restrictions on crypto traders, the Statement on DeFi Risks, Regulation, and Potential was released. Another issue with DeFi is the increasing amount of centralization. This not only increases the transparency of financial transactions, but it also allows government agencies to monitor and prosecute dishonest market participants. The primary advantage of the DeFi market over other institutions is its decentralization. Decentralized markets are an entirely new chapter in the global economy, yet they are being regulated using outdated rules. And the higher the level of centralization, the more the industry will be subject to regulator punishments. As a result, the industry will undergo adjustments, and DeFi will lose its key differentiating traits. Consideration for taxes. Taxation is a less urgent issue with DeFi. Certainly, not in terms of fiscal revenue. The major issues are the taxes of smart contract transactions. The issue is that transactions in any liquidity pool are almost always performed in combination with fiat monies like as USD and EUR. Because such a transaction occurs every 15 seconds, imposing a charge on each individual transaction would remove the profitability of such transactions. Number 3. Counterparty danger. Despite the ephemeral nature of the decentralized finance industry, it is not without individuals. Each project has its own development team, public relations team, and creators. It is incredibly advantageous for projects to reveal their teams and contact a potential investor. This, however, does not prohibit your counterparty from incurring financial losses to you. When a user encounters an anonymous command, the major dangers occur. As a result, doxy team projects are quite popular in the DeFi market. These are teams in which developers and creators do not hide their personality and actively engage with the audience. Working with an anonymous team increases the investor's chance of seeing the project token at $0 while its creators have already flown away to Seychelles. As a result, transparency is critical in the DeFi business. Investors want to observe the project team and know that its members are capable of developing the project. In this case, social networks such as Twitter, Discord, and Medium play an important role in determining where information is spread. It is critical to maintain contact with the development team and control the flow of news in order to be more flexible in terms of risk avoidance. Number 4. Token exposure danger. One of the primary hazards in DeFi is the impact of a token's price due to its volatility. Beginners who do not fully comprehend the working of the overall system are typically exposed to it. Experienced users, on the other hand, are not immune to a sudden fluctuation in the price of a token. Such risks develop as a result of a desire to increase profits or acquire a riskier asset. Projects with minimal liquidity and capitalization are examples of such tokens. On the one hand, such digital assets increase the possibility of earning money through scarcity. However, due to heightened volatility and unforeseen challenges with quitting a deal due to a lack of liquidity, this is an extremely risky enterprise. These dangers primarily affect modest undertakings. Popular cryptocurrency traded on major dexes have relatively substantial liquidity pools. This drastically decreases the danger of losing money due to the token's volatility. Staking bitcoins on DeFi is likewise regarded as a significant risk. This is due to cryptocurrency insecurity, which might result in the loss of all your funds. You would also have to take risks on Binance and DeFi. This will always have risks owing to the volatility of the coin and the lack of access to it for a period of time once staking begins. Number 5. Temporary loss. Intermittent losses are a major concern in the DeFi sector. The fundamental issue with such losses is that they are nearly hard to prevent. The risk of losing a portion of the capital is greatest in bilateral liquidity pools. Take, for example, two Uniswap pools, UNI-USDC and UNI-ETH. Because the decentralized platform token is built on the Ethereum blockchain, it has a higher correlation, codependency with an altcoin than with a stablecoin. As a result, when the price of ETH fluctuates dramatically, the price of a DeFi token is more likely to follow. The finding implies that, regardless of price change, the liquidity provider will virtually always be on the losing end of the transaction. As a result, it will experience non-permanent losses. Opportunities for DeFi and risk management. Even after the statement on DeFi risks, regulations, and opportunities has been published, some readers are still perplexed. Let's try to distill the most critical points you'll need in your trading firm. Audit. A security audit is an excellent technique to address any issues. There is a significant distinction in audit programs. Quality security audits include the following information: the quantity of engineer hours, constant source code inspection, the number and severity of hacker threats and bugs discovered, code debugging. It is critical for the project and developers to have a thorough understanding of the source code and the ability to identify any flaws. Of course, such a slew of issues sparked a lively debate about the DeFi risk score. As a result, certain effective risk mitigation strategies for operating in decentralized marketplaces have arisen. Diversification. Don't put all of your eggs in the same basket. Everything is apparent here. The more valuable and increasing tokens you have in your investment portfolio, the more probable it is that you will break even when exposed to one of the hazards of working with DeFi. It is also useful to consider asset distribution across different DeFi protocols. This is especially crucial when dealing with high-yielding tokens with limited liquidity pools. This method will allow you to secure your funds from loss. Web bots and trading. Anticipating dangers is another essential strategy to avoid them when working on DeFi protocols. To do this, Web3 scripts are available, which allow the user to set the parameters of transactions and trading methods. When dealing with DeFi, an automated DeFi risk management system will allow you to avoid the emotional component as well as other problematic factors. When working with several exchanges, there will always be queries about which to use, where to locate better possibilities, what SushiSwap and Uniswap are, which one to utilize, and so on. We invite you to explore our website for additional relevant information and to trade responsibly. The DeFi industry is evolving and changing at a rapid pace. With this in mind, any investor will benefit from frequent capital movement. This considerably decreases the possibility of being exposed to dangers. Simultaneously, the new possibilities of decentralized marketplaces provide you with other methods to benefit.